The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another wonderful edition of the Power Trading Hour with me, your lovable and humble host, somewhat squeezably soft, David White. It is March 1st, 2013 at the headquarters of Technical Trading and Investing. And as we start off today, we remember Mickey Mantle, who on this day in 1969, lucky number 7, retired. So what can you say about that? 18, World Series records, 18 home runs scored, 42 RBIs, 43 walks, and 54 strikeouts. Mickey Mantle died in 1995. If I remember right, he had a couple of extra livers. He was kind of a heavy drinker late in his life, but we'll see how that goes. So anyway, what else do we have? Incomes dropped by the most in 20 years. Households were weathering the payroll tax increase by socking away less money in the bank. Personal income fell 3.6% due to the disposable income. Construction spending missed expectations today, falling 2.1% month over month. And the hits just keep on coming. Opened up down to about 1501 on the S&P cash. We're trading out at 1518 on the S&P right now, and a lot of mixed emotions out here. We are on the what's probably going to be the last 24 trading hours of fund buying. Fund buying will probably be pretty much completed by Monday at noon, if not today. And I think that's probably why we saw a lower open and a push up here. Volume right now is 2.4 billion shares, so a little bit better than it was yesterday before the blow off into the close. But we've got a market out here that looks like the Fed with a fire hose. Any chance of any kind of pullback instantly gets hosed on by a giant wad of cash. And we'll see how this works out. But we've probably, right now, my model shows that we either have 250 points up or down from here. If this market cracks because of this action, we're probably going to see not a lot of people come back into this market until maybe 1325 on the low side. If it breaks out here, a wild and unbridled irrational exuberance, probably matching the 2001-2000 dot-com bubble, will probably develop. The reasons why I say that is when you look at earnings and the forecast for earnings, there's nothing to justify the PEs going forward here. And in fact, if you look at the leading indicators, they're actually showing GDP to not grow at all or pull back. I suspect we're going to have our first couple of quarters of negative, what they always like to say, negative growth, i.e. we're going in the brown can. But that's probably not unforeseeable. We sucked a lot of money out over the last 8 weeks with new higher taxes that, of course, only hit the highest income earners, except I see a couple people behind some glass back here that I know that they paid higher taxes. I learned a long time ago that a politician is lying about taxes when their lips are moving. The first time I remember getting into this was, it was a deal in my home state. Well, at least what I consider my home state, in probably around 1980, early 80s. And they were going to put on the lottery, and all the money was going to go to the schools. That lasted all of 3 years, and then all the money went to pet projects and highways in certain districts, and they lied and they lied. In fact, I think most of those guys should have been rounded up and beaten slowly with shovels, and probably haven't changed my opinion on most politicians since. lying weasels. So, speaking of that, we had the president come out today and basically tell everybody how he disliked the sequester when it was his idea, which they brutally attacked a reporter this week on and called him all kinds of names, said he was going to regret it. So they all sicked on him this week. But it's even back to last October, you can find instances in the newspaper where he said it was going to be necessary. It's nice to be necessary and at the same time beat your opponents over the head with it. So I don't know. I'm just kind of miffed. The idea that we can spend 2% more than we did last year, and all of a sudden all the hell in the world is going to rain down on us is beyond my comprehension. Maybe I'm just not that smart. I don't understand how you can only spend 2% more than you did the year before, but all hell's going to break loose. But that's just me. Market certainly doesn't believe it. 1518 out here on the S&P as we started the show. Let's see if I update it here. Yeah, 1518. 2.4, getting to 2.5. So the news not very good out there. Market doesn't care. Initially tries to sell off and gets pumped right back up because we're not allowed to have any kind of dip in this market. I know that that makes me more nervous than anything. We had real nice pullbacks on light volume and moved higher, but in a narrow trading range, once you move to a high, makes me think that we've got either a blow-off top coming of biblical proportions in the marketplace, or we are going to fail here. Intuitive Surgical was asked by U.S. regulators some questions that spooked everybody in the last 10 minutes of trading. Last night, ISRG was down about 16%. It's up about 8% today. They make $1.5 million robots for surgery, and they were used in almost 500,000 procedures. What has spooked everybody in Intuitive Surgical was the thought that Obamacare death panel kind of things are going to be running around, and they're looking at ways of cutting out expensive technologies. One of them might be Intuitive Surgical. So at this moment, everybody's a little scared and skittish, but it had a huge move down. Was it $80 yesterday? About half of that back today. But then we'll look at the chart. I don't think you can make a lot of it other than people are extremely skittish when it comes, especially since we're going to have basically all medicine and doctors' cares handled by socialized medicine probably in the next few years. What's going to happen when somebody in the government doesn't like what you do or what you make, instead of the market deciding whether or not it's good or bad? And it really spooked Intuitive Surgical yesterday. J.C. Penney, a little bit more coming out of Ron Johnson's discussion, in that he said that J.C. Penney has laid off 19,000 employees throughout its transformation so far. Apparently not enough because they couldn't make earnings, but at the same time, are there that many people left for them to lay off? Pretty interesting question. I just can't imagine that JCPenney has that many people that they can allow that off. Yesterday, Tim Cook was finishing up the Apple's Investor Conference, and there's some nice charts out today. You can find them on the web. Pretty interesting. Whenever he starts to speak, Apple continues to sell off because, of course, he doesn't say anything that they want to hear, like, yeah, we've got a pile of $135 billion. I know it's going to be 150 and then 170 billion, and we're going to be making new products, and not that we're going to need a lot of that cash to make that, but we don't see like there's any reason to give it back to the shareholders. And of course, the kind of interesting chart of every time Tim Cook speaks, how Apple sells off. We'll look at Apple's chart today, but it was looking rather weak today, at a high of 438, printing off at 433 now, considerably closing below 535. Would probably open up that 395, 390 area today on Apple. It's off almost 2% at $8.40 off yesterday's closing price. Google's up. Well, we've talked about that. It's up a little bit, 0.5%. Nothing too exciting. We're going to go through some earnings fairly quickly out here. We're going to get to them right away if we can, and I think we can. So what are we looking at that? A lot of earnings out. I'm going to try to get through as many of these charts as I can. These are all earnings and news from the last day or so. We've got a plenty, so I'm going to have to zoom through those. You can always give me a call at 877-927-6648, 877-927-6648. Love to take your call. And let's see what else we have. Air Lease Corporation, AL, came out with earnings. Popped up a little bit. It's up here to the $28 range. When you take a longer look at the chart for Air Lease Corporation, see it's going to probably try to make its way up to this 29.94 high of May 20th, 11, and just needs 1 million shares. Kind of light today if we were going into that high, but still not there. Best Buy, of course, the original founder was talking about buying it out. Basically, he had $1 billion or more worth of shares, and my take on it was that he wanted to get out of this thing. So he put up this phony BS story about a buyout to get the stock price up. So he had someone to sell to. And I suspect when we start seeing in the next coming months his filings, we're probably going to find out he was selling all the way up. But yesterday did come out and say that for the moment we're giving up on any kind of buyout of Best Buy. But my guess is that he just didn't want to ride this thing all the way down. And the best way to get out of a stock is create a story and get a market that you can sell into. I suspect that's exactly what they've done. Kind of sold off a little bit today. Not a whole lot of future for this company unless someone comes up with a new business model. Sotheby's out today also with earnings. Popped up a little bit. BID is the symbol on this. Basically going after its February 20th high at $40. 1.7 million shares that day. You got about 1.4, so it's going to come inside. Probably the big winner today is Salesforce.com hitting a brand new high. CRM, nice gap up on decent volume, breaking the previous high out here on higher volume. So one of the few really bullish stocks out here. What else can you say about it? They're going after Apple's business to some extent and continue to do well. Deckers, another one popping up on earnings news, high volume, breaking previous high, but it is coming into a gap. That gap down on huge volume, and looks like it's probably going to stop it dead in its tracks. DECK, the symbol, and we're looking at the September 18th downdraft day, and that came in at 8.3 million shares as we got into that gap down. Volume not all that bad, 7.3 so far, but probably still going to be fairly decent resistance all the way up through about 49 before it's going to find any easy running. We'll be back in a minute. Give me a call, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we watch this market move out, just keeping an eye on some of the other commodities out here. We've got crude off, what was it, about $1.57 today? If I can see that right, about 90.50. So we continue seeing deterioration in that oil market. But I suspect that over time we're probably down to 65, something like that, in the crude market over the next year. A lot of supply coming on, and so far not a lot of new demand. Demand's still strong, but not new demand. And basically we're seeing the amount of miles Americans drive down to 1980s levels, and kind of shocking that people just aren't going very far and very much anymore, even with more fuel-efficient cars. So we've got a few more people these days, cars burning a whole lot less gas, and people driving those cars that burn a whole lot less gas, a whole lot less. So interesting. Foster Wheeler came out, dropped the Chalupa. It's the one that put the Baby Ruth in the punch bowl today. Nice little doji star forming on monstrous volume out here. FWLT. It's in the mid $19 range right now. Probably headed back to its lows, which is the July 12th, probably July 12th, June 27th lows. Probably in the 15, high 15s, mid 15 area out here. Probably a good indication that we're going to see that tested here fairly decent. That's probably actually even the midpoint with this doji out here, but probably going to take a while to get there. But put that on your brown list. The gap up on earnings actually doing a little better. It's been in this trading range for a while, and that trading range goes from about $30 up to about $35. It's been in that for a few months now, since the beginning of December when it came out and said it wasn't going to make its numbers. Popped up a little bit today. Volume is not all that exciting. What do we have here today? 6.3 million shares. We've been in this trading range when that high volume move came down on 37.7 million shares on the 4th of December when they said that they were not going to make their numbers. Earnings were just a little bit better than everybody thought and doing a little bit better. Hospitality Properties, another one coming off its highs on earnings. Volume's not all that exciting. Has not really broken the trend significantly on the way down, but Hospitality Property Trust, HTP. So keep an eye on that. Let's see. Yeah. Joe, the St. Joe Company, we've talked about this one. A big builder in Florida, Arizona for housing. They came out with earnings today. Pretty much kind of peaked on the way down to where their last major breakout was. Volume is not all that exciting, so be kind of interesting in here if you were looking for a day play. Probably not a bad one if you could have caught it at $20.64, which was the low today. But it did open up and is higher now. But it's along its gap. When you look at the move on November 2nd of last year, thing took off with monstrous volume, 2.3 million shares. We've basically come back into that range on less than 500,000 shares on November 16th, and you kind of came close to touching that gap again today. My guess is it's going to come back farther into that gap, but actually not a bad looking chart, other than it did put in a sign of a decent high, and that was the January 23rd high out here. Very light volume, 350,000 shares. But we were talking about these several weeks ago when I said that probably the housing top was in, that they were looking extremely tired. It's time for a pullback, and that's what we're looking at. McDermott International, another Baby Ruth in the punch bowl out here, and they dropped the chalupa. It's headed back down for its lows on November 16th at $9.66. 3 million shares. It's down today with 13 million shares already, blowing through pretty much the high volume days that it did have back on the 30th of January and the 8th of February, where it made its highs. So more volume than you'd had back out here at this January 8th. Normally, markets with high volume highs get retested up at those highs, and we still might, but it's going to be a while for these. More likely, like heavy volume lows get tested before heavy volume highs. And we have a test of the low out here on November 16th that never got tested. My guess is that this is driving its way directly there. Well, you have plenty of time today, and it's a quiet day. Give me a call, 877-927-6648. That's 877-927-6648. We'd love to have your call.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the market, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
I love Mickey.
Mickey who?
You know who, the fella with the celebrated swing. Oh, I love Mickey.
Mickey who?
You know who, the one who drives me batty every spring. If I don't
And Mickey Mantle, remembering his retirement this day in 1969. Anyway, as we take a look at this market, we're going to go back to a few. We were just on Joe, so we'll look at McDermott International, MDR. Another one on the downside out here on heavy volume, blew through its previous gap, headed back down to the November 16th low at $9.66 rather abruptly, basically wiping out, I don't know, about 14, 20 days of trading to the upside on McDermott. MDR is the symbol on that one. But 14 million shares, certainly the highest volume. It's right back into, low volume, which 969, kind of in a bigger trading range out here from November 16th low at 966. Probably going to be support out here. Not a bad trading range, but just doesn't look like it can get anything going. Medivation, MDVN is the symbol, going back and testing its previous low. It has gotten into the candle of November 9th at $43.16 with a million shares with 3.6 so far already. Is that right? Yeah. So going to be probably breaking out these lows fairly soon. If it does, next stop is probably around the $39 level for motivation. MGA, which is Magna International, they make parts for cars and industrial equipment, trucks, that kind of stuff. Good news for its earnings, breaking above the gap that goes back 2 years. Let's go back 3 years and take a look at this thing. Looks, like they're going to break out with volume out here. The next stop for this would be the January 11th high of 2011, $62.20, and be interesting to see how that works out. We've got Northern Oil and Gas. This thing's been bumping around these lows, and the last major low out here at 1325, 1373 for the November 15th low sets up these lows. And kind of getting into that, little volume might be making a low out here in Northern Oil and Gas. But may need a little bit more consolidation. Also could get back down to this May 25th, 2010 low at 1172. But certainly, you get your huge run. You've got an untested high on March 7th of 2011 at $33.98. Always have the possibility of coming back and getting that. But I'm going to think it's going to be very, very tough for any of these gas companies as long as crude continues to be headed down. We've got a call. We're going to go right to him. It's Rick in British Columbia. We're going to be looking at the IWM. How you doing today, Rick?
Hey, really good. How are you?
Fantastic.
Hey, when you look at the IWM like on an hourly chart, that's pretty wild. And I'm wondering if you think...
You mean today's?
Yeah, sorry.
Yeah.
I'm wondering if you think window dressing has something to do with this.
Well, yeah, I think I brought that up earlier. This is Monday, probably about noon, is going to be the end of fund buying by the charter. For those people that are new listening to the show or newer traders, funds must be 100% invested by their charter by the first, last 2 days of the month, first 3 days, last 3 days, first 2 days. I never can keep it straight off to look at it. But you always find fund buying in that period. They have to be 100% invested. Money managers, on the other hand, buy these funds, and they expect them to be 100% invested, and they will hedge that position somewhere else. So no matter what happens, you've got about 4 days where funds come up and they have to buy, and there is a markup, and it is hugely statistically provable. So, yes.
Well, that's interesting. That's good to know. So maybe around the noon hour we might see...
on Monday, you'll probably see the stragglers come in on Monday, but I think since we break here on the 1st and go back, most of these funds have been buying early as the market's gone up, and I suspect that they see that there are those willing to push this market up and then see absolutely no volume like we saw yesterday in it.
Yes.
There just wasn't that much fun buying in there. There's a company called Trim Tabs that you can pay them a lot of money. They've got some stuff on the front page of their website, but it keeps track of fund inflows and outflows. And basically you've got a pretty good deal where there is going to be a markup, and that is going to be on the last couple of days of the month, and normally the first 1 and sometimes 2 days of the month. So most of these fund buyers, they just decide to go and buy early before the last of the people try to top tick the market by buying it. So if we start breaking out, as long as we stay below about 1525, I think the bearish case can stand. Above 1525, and we could see the kind of dot-com bubble blow off top come in. Because I've got everybody and their dog bugging me to go long, and it just makes me think that there's a lot of low-hanging fruit out there. If they push this market higher, people are going to buy at the top.
Hey, when you the last crash we had, I'm not trying to say we're going to crash, but with all the debt in the world, et cetera, I don't even know what caused the crash in '87. What was it, 25% correction in one day?
Yeah, that was probably the first flash crash caused by computers.
Oh, is that what it was?
Yeah. There was the equivalent of today's high frequency trading. It wasn't that high frequency, but it was computerized trading. And if you go back into some of the discussions about it, you're going to find that what you had was a market that was probably going to break somewhat already. But these computers, they really didn't have a lot of experience in fast markets. And what happened was they had just gotten the computers in there for a couple of years. They were basically maintaining the markets for a great deal of the time. And what happened was when the volatility picked up, all the computers didn't know what to do because they hadn't had that kind of volatility before, so they all backed out. And then everybody that was standing at a post in the New York Stock Exchange didn't know what to do, so they stood back, and the whole thing collapsed. And that, I mean, the market was overpriced at the time, but conditions were right, but it was caused by computers.
You know, when you got time, look, another one that looks like, you know, the fact that we've gone up on no volume is if you look at the XLP, and I'm going to let you go with that, but if you can go like on a yearly, quarterly, monthly, and just go to where we are now, you'll see like we're just going up on fumes ever since 2011 on a yearly.
Right. You know, the case that they would make against that is that there were a lot of high frequency, and I mean high frequency, I mean millisecond trades going on or nanosecond trades going on.
Oh, I see what you're saying.
And that there were a bunch of different companies. Eventually, one company's algorithm and computers beat another one's fast-speeded computers, and eventually those people went broke. And so we're getting less and less high-frequency trading, not more, because basically the Darwinian survival of the fittest and most adaptable won out, and a lot of those people have gone to the sidelines. That Goldman Sachs was able to hire and pay the most meant that they were probably going to get the best algorithm and the best hardware guys to set up their shop, and they were going to do better than the less well-funded, kind of almost like a NASCAR race kind of thing, right?
Yeah.
Yeah, you've got the well-funded teams and then the unfunded teams. Well, in this thing, you can't even start to make out if you're unfunded. So those companies have slowly gone away, and we've seen the volume drop out because of it. And I think that you can make a case on that. At the same time, even if we just look at the volume of the down days, like the sell-off on the previous day, I think it was like we're doing 5 billion shares down on heavy days, and we're, you know, even with yesterday's close, we were doing like 4.1 billion. So the down days are finding sellers. The up days are more, but very muted in their move. So I think we're going to know by about noon on Monday whether or not this thing's going to break out. We need to close above 1525 to really make me believe that they can push this higher.
Well, I'll tell you one thing that's encouraging for the bulls is the fact that the U.S. dollar has been rallying and the market's not backing off.
Yeah, like I said, you got Bernanke there with a fire hose of money.
Exactly.
If he sees any, but my problem with it is I just don't understand how you how you solve the problems of a bubble by creating another bubble. You got a heart attack, I'm going to solve it by giving you another heart attack. It's beyond any kind of logical reasoning to me.
Well, that's true, but my question to you is when your country has a close to $17 trillion debt now.
Yeah.
Many states and cities are big in debt.
Yeah.
Where does Bernanke find this money?
He just calls over and tells them to add some zeros in a column on a computer, and that's it. It comes from totally nothing, right?
You wonder how. Now you know why currencies, biblical times, have gone, aren't around anymore because currencies are just artificial.
They are fiat currencies normally.
But,
you want to keep them well. My question would be, I see a lot of weakness that no one continues to talk about in China. They all say everything's great in China, everything's great in China. A lot of the stuff that macroeconomic stuff over there I read is not that great. What happens when they decide to not continue funding our debt? And
that's exactly right.
And that's the end game for all of it. Eventually, at one point, that's it. Right now, they are building.
Well, as long as you keep buying product from them.
Yeah, but
that's one good thing you could do.
But they got to make money on it. What they're really doing now is exchanging things like their own personal resources for cash, and so that they may be digging up iron ore and other stuff and buying it. All they want to do is keep a little bit more than what they had before, and accumulate the kind of strength that they can get by getting other foreign currencies into their country. So, they're spending a lot of money, and I don't think this is really marked anywhere. But right now they're trying to buy the solar panel industry by basically subsidizing it. They're trying to do...
Well, they're coming in here trying to buy a lot of... getting into the mining industry.
They're using that cash. They're turning around and using that cash to go out and buy assets outside of their own country. And I think that's smart when you can't even breathe in their country's capital. Mm-hmm. I mean, I don't know if you've seen any of the pictures.
No, but I've heard about it. Yeah,
it's no one would even think of it spending a day in there from in the United States. It's
the water.
Huh?
Their water.
I don't know about the water. I just know that you can't. The smoke and the pollution is so bad that they're taking all the waste chemicals and putting them in their rivers. They're basically doing the same thing we did in the 50s and the 60s when we had massive growth and we were getting way ahead of ourselves. So I suspect that they could come back, and when they do, I think that's going to be end of them buying the treasuries, and at that point, we're going to have real austerity. And I don't know what it's going to be. My personal belief is that we are at a point now where no matter how much money Bernanke throws at the market, it's logarithmic in the amount he's going to have to push it any higher. And
I still don't understand where he gets the money from, but I guess because Congress raises the debt ceiling, right?
Right, which has nothing to do with how much money there is.
He was throwing $85 billion per month with QE3. Is that correct?
And everything else.
Well, I don't think that comes. I watch U.S. politics, U.S. news a lot,
mm-hmm.
and I never ever heard anything about giving Bernanke money to feed the market.
It's just an entry in his column.
I don't think anybody knows where he gets it from.
Yeah, he just gets it from the Treasury. He says, print more money, and we're putting it in our banks, and we're depositing it.
But the bottom line is that all affects your debt, doesn't it?
There's this crazy school of thought, and it's totally insane, that since we own we owe this money to ourselves, we can just write it off. And it's insane. I'm going to play an audio clip when we get back, and you'll understand it a little bit more.
Okay, thanks.
Okay, I do have one here, and if I can find it during the break, I will play it. Unfortunately, I don't think we have it fixed yet, so you're only going to get it in the right channel, but I think it's well worth playing again here today. Thanks for the call.
Yeah, you bet.
Palo Alto Networks, in the last minutes we have in this segment, kind of one of the newer IPOs out here. Keep an eye on it. It has been kind of the darling child. High was 72.61 on September 5th of last year. And it's kind of made its bottom out here. Like all stocks, it goes through the period of actually being a lot of those lockup shares finally coming out. This thing did bottom at $47 with lighter volume, but needed to come back to about $55.90 to be a buy. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
One of my favorite clips is both hysterical and amazingly true, because I don't think anybody let me put it this way, very few people understand it, but here is my audio clip about how all that financial engineering works.
It's a write-off for them. How is it a write-off? They just write it off. Write it off what? Jerry, all these big companies, they write off everything. You don't even know what a write-off is. Do you? No, I don't. But they do. And they're the ones writing it off.
But basically, we've got a government that works like that. It prints more money. It dilutes the shares. As long as they don't dilute it too much, everything continues to work out for a while. But the idea that the Fed is omnipotent doesn't work for me. We have seen George Soros break the Bank of Britain and well, I guess it's the Bank of England, actually. And we can see the exact same thing happen here. The idea that a country, a state, or an individual is bigger than the market is not true. Now, can they go on a great while? Yes, but here's the one thing. They never see it coming. You never can find Greenspan talking about what was going to happen and how he caused the huge, easy money caused problems. None of these guys ever have to say they're sorry. They can't. Greenspan's famous for saying, you can't tell you're in a bubble when you're in it. He's either a liar or stupid. Basically, I've distilled my thinking down to that for these people. Either they're stupid or they're lying. In my case, I don't think he's stupid. I think he was lying. I think he knew he was in a bubble. But at the point that you want to say, let the bubble out, every politician and his dog's going to come after you. And these guys learn to live within the system. Probably why going to Washington is the equivalent of selling your soul to the devil. Eventually, these guys just, they just work on you every day. You want to be loved by everybody. Unfortunately, especially the worst of politicians can be seduced by that evil. The idea that one day we won't have to pull this money out is beyond the scope of, I think, logical thinking. The question is just whether or not you can actually do it. So anyway, we're going to look at a few more charts as we have time here today. I will be in the second hour of the Tom O'Brien Show. We will be talking technology. A lot of stuff happening this week. I covered in the newsletter. Some other stuff we'll be covering tonight in that 5 of 20 hour, I believe. But we'll be looking at it. Anyway, other stocks moving at, I forgot to also bring it up, but you need to sign up for Tom's seminar along with March 16th out in Menlo Park in California. Go to the front page of TFNN and check out that new seminar. I think it's going to be a sellout, as everybody keeps telling me. PNM Resources. And this has had earnings out here today. Is giving a sell signal if it continues to close below this high, the last high on $22.54 on 740,000 shares. Looks like we might come in light today or just shy of light. It's certainly not going to close above that high. PNM Resources, one to check out. Other ones, Salix Pharmaceuticals, another one of these that's got the pattern we keep bringing up. That's down on heavy volume. That happened on, June 30th of last year. We came back in and started to fill a lot of this gap over the last couple of weeks. Looks like it's a little weak on earnings. Anyway, make sure and check me out in the second hour of the Tom O'Brien Show tonight, where we're going to be talking technology. You all have a safe and wonderful weekend. Remember, you can always catch me on Channel 14. And at 2 o'clock, same bat channel, same bat time every day. You all have a great weekend.